Banking giant HSBC sees profits double during the first half of the year thanks to an economic rebound in Hong Kong and Britain. Open for business. From today, double-jammed visitors from the EU and US don't need to quarantine when arriving in the UK. Hello, very warm welcome to World Business Report. I'm Ben Boulos. In a minute, we'll also... Oh, the lights have come on. That's better. In a moment, we'll have the details on Australia's biggest ever corporate buyout. But first, the banking giant HSBC saw its profits more than double in the first 6 months of this year. Europe's biggest bank made a whopping $10.8 billion in the period, mainly thanks to a rebound in economic activity, both in the UK and Hong Kong. Those are its two biggest markets. Well, joining me now is Janet Mui, the investment director at Brewin Dolphin. Janet, what did you make of the results?
Hi, good morning. Thanks for having me. The results are very good. Actually, as you mentioned, the profits before tax almost doubled, and that's 1 billion more than investors have expected. And you saw that profits actually were in every single region that HSBC operates. And then they were supported by the economic recovery. And the very key point that investors are concerned about is the dividend. And in fact, they can resume their interim dividend after the Bank of England has relaxed its restrictions. So that's all great news for shareholders. And in terms of the guidance, they continue to guide that dividend payout will be about 40 to 55% of their earnings. And they are also expecting credit growth to remain pretty robust at mid-single digits. So overall, a pretty robust set of results.
It's interesting, though, isn't it, that they've achieved this at a time when around the world interest rates are at record lows, because normally that hits banks' profitability.
Yes, your observation is absolutely right. We see that the net interest margin, which is a measure of profitability and is highly linked to interest rate, that actually has dropped. So the main reason of the profitability in the first half is because, first of all, that's the economic rebound. We have a very low comparison base last year when COVID hit, and subsequently we see very strong economic rebound, so that helped. And also the main reason for profitability is actually the lower loan loss provisions. That is the provisions that HSBC set aside last year when they expected some bankruptcy loan losses. But now with the economic recovery, they can manage to lower that reserve provision. So that actually have been very uplifting to their profitability.
And what will investors, not just with HSBC, but investors in banks more generally, what will they be keeping an eye on in terms of potential headwinds in the coming 6 months to 12 months?
Yes, absolutely. In particular for HSBC, the investors will be watching for the economic slowdown in China and Asia, because there's a huge market for HSBC. And of course, the tailwind from the credit loan loss provision is going to be subsiding into the future. And the ongoing headwind from interest rates, very low interest rates, is going to be in focus as well. And a lot of the profitability also was driven by very strong trading activity because of volatile markets and very strong initial public offerings activity. But that is likely to slow as well. So investors will be cautiously watching the earnings going forward.
OK, Janet Mui from Brewin Dolphin, thank you very much.
Thank you.
Twitter boss Jack Dorsey's digital payments platform Square is buying Australia's Afterpay Limited for $29 billion. The deal, announced on Sunday, will be done entirely through a share exchange, and it values the financial tech firm at a 30% premium. It's also the biggest deal ever done in Australian corporate history. Our correspondent Simon Atkinson has the details.
Well, Afterpay here in Australia is become a massive company. It's only been going for about 7 years, and effectively it's a buy now, pay later firm. So if you go and try and buy something online, you'll almost always, with any major company now, be offered the opportunity to use Afterpay. And it's the first company in this region, really, to get into that market where people can buy things in installments. And that is what Square really sees in it. There's PayPal has suggested it's keen on setting up something very similar itself. There's rumours that Apple is looking at a similar business model. But what Square seems to want to do is get into a business that's well established in this field And for Afterpay, it's a chance to get into bigger markets, particularly, of course, the US. Now, it makes its money by largely charging the companies it works as a kind of a merchant for a cut of the transaction. It also makes some money from its customers when they don't make those repayments. But it says that that is a relatively small amount of its income. And although there is call for the industry to be greater regulated, at the moment it's a booming industry, and this is the biggest corporate takeover Australia's ever seen. It's seen as one of the huge success stories of Australia, and that seems to be what Square wants a piece of with this offer.
Simon Atkinson there. Now, from today, people who have been fully vaccinated in the European Union or the United States will not need to isolate when coming to England, Scotland and Wales if they're coming from an amber list country. Travellers will still need to take either a lateral flow or PCR test pre-departure and a PCR test on the second day after they arrive. Under 18s will be exempt from isolation and some will not have to test, depending on their age. So how much will this new policy help the UK's tourism sector? I put that question to the head of one trade association that represents the UK's inbound tourism sector.
Well, this is the first piece of positive news for those involved in inbound tourism, and there are about 500,000 people in the UK that are employed in inbound tourism. It's the first piece of good news that we've had for about 17 months. So, yes, very good news.
But of course, this only applies in one direction, doesn't it? For people wanting to travel, say, to the US from the UK, they still can't do that because the US rules that are in place.
Yes, that's right. At the moment, this is only going to apply to US citizens themselves. But still, nonetheless, that makes up our biggest market, both in terms of the amount of people, about 4 million people, and the amount they spend, and that's about £4 billion. So it's hugely important for the UK market. But it does come very late in the season, that is true.
I suppose in some ways, for the sector you represent, inbound tourism, this is, in a way, the ideal scenario where people are allowed to come in without having to quarantine. But a lot of people who may otherwise have gone to these destinations from the UK are going to be staying at home and holidaying here.
Well, we need a successful outbound sector as much as we need a successful inbound sector. The planes that operate obviously need to be profitable on both sides of that equation, or else there's a risk to whether they'll continue. And of course, inbound tourism is £28.4 billion to the UK economy, so our fifth largest export sector. So it's bringing in incremental money into the UK. So yes, that will be helpful.
And since the rules changed today, in anticipation of this, have your members seen an increase in bookings from the EU and the US?
Yes, I mean, we're very, very hopeful, and we are starting to hear some reports of some business coming in. But if you look at the United States, for example, only 22% of that business would normally come between September and December. So we're not expecting a massive rush of people because a lot of US travellers, a lot of EU travellers will have already decided where they're going. So although it is a fantastic start, government will continue to need to help out businesses because they face no income for 17 months as a minimum. So yes, very positive, but as I say, just a start, really.
And how much has domestic tourism, people staying in the UK, contributed and made up the shortfall that your sector would normally expect to see from people coming here from elsewhere?
Sure, domestic tourism is massively important for inbound tourism. International consumers like to undertake many of the activities that Brits do. But when Brits travel, they spend about a third of what international visitors do on an overnight stay. So domestic, whilst it might be very busy on coastal, for example, some of the centres which rely upon international tourism, our big cities, for example, really desperately need some of these visitors to come back and start spending their money.
Josh Croft there. Let's take a look at some of the other main business news around, and the video conferencing firm Zoom has agreed to pay $86 million to settle a class action privacy lawsuit in the US. The lawsuit alleged that Zoom had invaded the privacy of millions of users by sharing personal data with Facebook, Google and LinkedIn. The firm denied any wrongdoing but has agreed to boost its security practices. Bitcoin investors are bracing for more volatility. Germany may allow more institutional investors into the cryptocurrency space, which is countering fears that the new US infrastructure package will tax the sector and limit growth. Bitcoin is now trading at its highest levels since mid-May. Profits at the Dutch beer maker Heineken doubled in the first half of this year, beating expectations. The maker of lagers, including Heineken, Tiger and Sol, said operating profit hit $1.93 billion, but the world's second largest brewer also warned it would face weaker trading for the rest of the year amid rising costs and as the COVID-19 pandemic continues to hit key markets. Speaking of markets, let me give you a quick glance at the numbers as they stand. That's the picture from Asia overnight. And that is World Business Report. I'll see you very soon. Bye-bye.